All righty. Good morning. Good morning. Yes, we are successfully live. Good morning, everyone. Welcome to the Micro Moment Investing Show, Unconventional Wisdom, every Thursday, 10 a.m. Central Standard Time. We are live here with our panelists talking about all things market, trading, dividends, retirement. We try to bring a new topic every week for you guys to come together and bring some opinions. Feel free to share your opinions as well. We are live on Facebook and YouTube currently, so if you guys are on either of those platforms, you can type a comment into the box, and we will be able to see all of them. So send them through, and we can chat about any questions you may have. First of all, I have Joe with me. Joe, how are you?
Doing good, Micah. And let me say one thing about Tim. Tim just got off of our morning session for micro moment trading.
Yep.
And
I heard that.
Can you hear me?
Yeah, he's back.
Oh, there he is.
Tim's back now.
Yeah. Go ahead. I'm good.
Yeah, we were gonna say his mic wasn't working, but he just fixed it, so we're all good.
Apparently it is.
Yep. Absolutely.
Crazy.
Well, Joe, how was Micro Moment this morning anyways? Micro Moment, which is always nice for expirations.
Micah, it was great this morning. Been
good.
Slow week. Through today, we're up 43.398%. Now we've only been trading Apple because Mark, who trades Qs, was in New York, and he was going to be back in on the session tomorrow, and DJ John was not available to be here today. But anyhow, so we're up 43%. It's all Apple trades, which is interesting. And you know, he was going to give the Apple presentation today. Well, I guess he still is now that he can talk. But he is up 18.17% on Apple today, and then over 50% on the Apple trades earlier in the week. That's a huge 18%.
Yeah, and I had one more trade after we got off.
Oh, okay, good. I'll report it tomorrow then.
Okay.
Fantastic.
Excellent. So Joe helps moderate the Micro Moment Trading coaching, which is a very short-term system based on the beginning of momentum and different shorter-term series. We have a chart, proprietary chart that we can zoom in all the way to a 1-minute chart and get a lot of detail on the different type of volume that's happening, the different types of things that you may not be able to see if you're looking at a day chart. There's just, if you're zoomed out, it's going to smooth those lines. But if you're really in there, there's quite a bit happens, and they teach that every day at Market Open. It's a very, very great course. So.
Every day that the Market, we do it, and it lasts an hour in the morning. And Tim and Micah DeJohn state what their trades are. They say, I'm prepping this. I'm prepping Apple, for instance, in Tim's case. And then he's teaching you to read that chart, which you're looking at, and so you can do it too. And then you learn from that chart exactly and precisely when to enter the trade, when to exit the trade. And they're doing real trades, and you can follow those real trades. And we have people sending comments, and they are following those trades, and they're making as much as Tim and these guys are doing or more. And it's fantastic. You can sign up. I think Micah has a free sign up for a couple of weeks on the website. But it's just fantastic. And we're into our 105th week. Tomorrow ends our 105th week as a subscription service.
Wow.
And we're up over 100% per week for all those 105 weeks. Now, we've been doing this about under 5 years, trading our own accounts. And then these guys are trading theirs also. They trade ours and theirs. And these are real trades. And just incredible. 1 hour a day is all you need to do. So
I guess an easy example would be the TikTok. I have I think we're up to like 50 videos on there, but a lot of them are individual trades, even by Tim here. They show the portion where he exits or the portion where he's explaining something. We have trades from Mark and
it's just like you're doing a real trade. I mean, that's exactly what you see and what you see on TikTok.
Yep, they're just clips. So
Well, and since
yeah,
it's
look at the
there's a little dance after each trade because it's
yeah. There you go.
yeah.
Yeah, and Randy, how's the week going? We you're in a little bit on the longer term side of things, and we see we had quite the reset. I just personally have been watching SPY for the last few weeks. Haven't been trading heavily, but keeping an eye on SPY, and I mean, what 15 to $17 dump on SPY. How's everything? How's everything been?
Good. As you know, that Monday, Tuesday, Wednesday we're down days for the market. Just kept going down, down, down. Today's a rebound and could start going back up. But with the longer term positions that you mentioned, Micah, are the covered calls, and the covered call is a conservative um, technique to generate income on a weekly basis that reduces your risk of being in the position, because we do deep in the money covered calls, which generates income with the goal of getting called out at the end of the week and getting all the cash back and lock in the profits. And because we're deep in the money, the stock can go up, it can go down or sideways, and we still get called out as long as it doesn't go down substantially. Now, this Monday, Tuesday, Wednesday was a pretty substantial decline. So a few of my positions went into what we call management, which I implement additional techniques to actually lower the position down with additional profit to still be able to get called out at the end of the week. So had to do that with SPY and QQQ yesterday, and now they're $5 and $6 in the money today. So actually probably we'll be looking at closing those out early to lock in the profit and get the capital back to not have to be considered with what happens to the market tomorrow. But because of the management techniques, which no one else teaches, it's not the way that the normal market does their trading. They just say, close it for a loss, cut your losses, get out and go somewhere else. That's not what we do. We actually can manage that position. You have to, as long as you're in a good quality stock that you weren't speculating on. We're not speculating on these positions. We're getting into positions like Disney, like Netflix, like Microsoft. So they're long-term companies that are going to be around for a long time. And therefore, they're going to go up and down. That's what the market does. It goes up and down. But by being deep in the money on the covered call, it can go up, down, or sideways and still get called out for a profit at the end of the week. And that's the goal. Get all the cash back by the end of the week, have the profits for the week, and then start all over again for the next week. And so actually things are going pretty good.
Let me say this. I neglected to say it. It says, and Randy reminded me of it. Randy has a book, 3 inches thick. It's got all the techniques that he uses that we've accumulated over all these years. He invented it. Nobody else has done it except us on how to manage these things. And micro moment, we're only in a transaction for maybe, we try to make it 15 or 16 seconds. It's a long time if you're in it a minute, but we're in and out, we're through for the day. We never do anything, have anything out there overnight. And we're only trading big indexes like QQQ and such, and then we trade Apple because it's like an index almost.
Yes.
We're not trying to anticipate stocks going up and create value. We're trading activity. We don't care if they're going down. We don't care if they're going up. Randy's pretty much the same way because his management techniques, he can do everything. We only have one management technique. If you're a little light, green when you went into it turns red, you just get out of it. You're only going to lose a cent or two, and in a few minutes you're going to make that up maybe 5 or 10 times. Who knows? So
that is a huge distinction, and I mean a lot of that is based on our topic today. I mean it ties in. Is most of the conversation of trading, like this is really, really important. Most of the conversation of trading that you see online, that you have with your buddies, that this and this and this, right? All this time spent talking about trading. What are they talking about? Well, I just got into this company. What about this company? Well, this company's financials are this company. They've all been around for years and years. They're billions. They've got all sorts of fundamentals. They have, different earnings dates. They have like more power to you, but that's a lot And then you get into companies that have only existed for a year and trying to discover, hidden things, and then things come out, policy changes. Like, there's a lot to keep up with in the market. And then a Fed decision comes out and everything doesn't matter for you.
Right.
Like, it's a little bit overwhelming. So one of the core things that I just have always appreciated is that SPY is never ever going out of business. If it is, we got a rough looking world on our hands, and there's probably zombies crawling down the street, and we got other things to worry about than our pocketbooks. It's gonna be fine. But SPY's never going out of business. Q's never going out of business. Apple is a company. Could it go out of business? Good luck.
If it
IWM,
goes out of business, we're also in big trouble.
Yeah.
exactly. IWM, ETF again, like things that are established takes all of the time you spend talking about those things, and all the time you spend talking about what random company startup is having their first announcement this week, to how to better trade the technique, how to get an extra 2 cents on your entry, because you can actually do something. It's not theoretical. That if you take your confirmation off and do this and this, you can actually, it's about the technique, which is just something I've always appreciated. But
Micah, I just thought of something, Micah.
Yeah.
Relating apple is fruit, right? Related it to eating fruit. People, doctors say eat an apple a day. Okay.
Yep.
It keeps the doctor away.
So
Yep.
he does an apple trade a day. Helps out his financial picture, his financial health.
Yep.
That's right.
Absolutely.
Yeah. If you eat an apple a day, you can actually pay for the doctor.
There you go.
That's right. And we don't eat the whole apple. We just take bites.
You take a bite of it.
Yeah.
There's some good comments there.
I feel like if you ate the whole apple too, that would send you right back to the doctor. Good comment from Melissa here. She's a client with MMT for I don't know how many years, but one of our good friends.
Well, she's been with us for years. She's been on all the cruises. She and Peter, her husband, also. Yeah.
Yeah. She brought on Peter after, or did Peter introduce?
He came later.
I guess Melissa's on here. Yeah.
Mm-hmm.
Yeah, you showed in the light, Melissa, right? It's Melissa on P2 tube account. MT is by far the easiest of all techniques because I'm in and out back to cash each night. However, Randy's technique that Pete follows outperform me time and again. So it's easier, but you don't make as much. That's fair.
Yeah. Pete and Melissa, they're on all the webinars, and they take all the training and coaching and do the trading, and they're just fantastic. And so I guess it looks like that Melissa does the fast stuff in the morning, and then Peter does the conservative covered calls, and it says he loves being in the hunt each day and week with Randy.
Mm-hmm.
And I think that their daughter is using the technique stamp. I think.
Oh, nice.
Yeah.
Well, and that's a big point there, Joe. This is generational stuff. So you can learn the process, and then you can teach your kids, and they can teach their kids, and it just goes on forever. As long as there's a stock market here in the U.S., it's a process that you just use for the rest of your life and your kids' lives. And Micah, he's gonna have great grandkids probably by the time he's all done with trading and teaching all those guys how to make money. And just like with Dirk's son that started when he was about 8 or 9, and he's in high school. Maybe he just graduated, but he knows how to generate income for if he wants to go buy something. He just trades for a little bit, gets some income, and goes out and buys what he wants.
Randy, one of them graduated high school a couple of years ago. That's when you're talking about. But his younger son, who's only in like the 3rd grade, is a trader also.
He's starting it up too. See, Dirk is able to teach both of his sons.
There you go. Yeah.
Yeah. This goes under that topping of, give a man a fish, you feed him for a day, teach a man to fish, and, you feed him for life.
Mm-hmm.
Well, and Randy's technique totally based on compounding. That's why the returns are so huge. So micro moment. Now, I know these guys get tired of me giving this example, but if you had $2,000 and you put it into a trading account and did virtual trading, now you don't risk your money, and just made half of what Tim and our guys make in one day, half of that. which would be about 7% a week, and you trade just one trade a week, in 2 years, your $1,000, $2,000 going to be worth about $850,000, and then you'll be making $40,000-$50,000 a week, and you can do it without a lot of money, without risking the money by virtual trading. So, yep.
Excellent. So what we're talking today mainly is about the process of Apple. Tim's our resident Apple trader. I traded Apple for quite a while. Randy's done a lot of Apple trades, and Joe. So I guess Tim, I'm going to let you start us off. I think we've covered a good little amount to kind of get a concept of what we're what our mindset is going into this.
Sure. Yeah, absolutely. You know, when I was putting together this editorial, it really started as the ideal Apple trade. But when I finished this editorial, it really is how to use our technique to trade anything, right? Because it doesn't change all that much from ETF to stock. And this was just really focused in on kind of the basic technique of how to read our charts and how to use those profitably for making an Apple trade. Now, if you attended the seminar that I did, I guess it was about a month ago now, I went through 5 patterns that repeat pretty regularly with Apple. And in this one, and out of respect for those who attended that seminar and paid money and attended, I didn't give those away during this editorial, but I went a little bit different direction and talked about specifically what to look for in a trade, what makes a profitable trade for Apple. And I'll just start out with saying, you know, an ideal trade is when we see a short, fast, and highly directional tick move outside either the upper or lower Bollinger Bands. Our ideal trade will have a duration of 15 to 30 seconds for most trades. And our ideal trade starts with the tick. And from there, we talked about tick movement, looking for angle, looking for speed, looking for duration. So for instance, you know, when we consider getting into an ideal Apple trade, one thing that we're looking for right off the bat, we're looking at the tick. And what we want to see is a tick moving as vertically possible, as vertically as possible, in either moving up in the put call position or moving downward in the put position. And we're looking for a tick that lengthens without breaking, or it breaks slightly. We'd love to see it move outside of the Bollinger Bands. It's a unique aspect of the ice charts is our tick is allowed to go outside of the Bollinger Bands. So it creates graphically, it creates a situation where it can easily see momentum in our trades. So that's one thing we look for in our ideal Apple trade. We want to see that tick move. Yeah.
It almost seems, Tim, that there's when you zoom in to really like zooming in on the market, there seems to be a level of physics that still applies. Mm-hmm. Would you agree with that? Or?
I would. In the respect that a tick that is moving fast tends to keep moving in that direction, either up or down. Now, you know, we can't predict which way the tick's going to go. It can reverse instantly for any variety of reasons. But when you work with our ice charts long enough, you start to see how things set up. And one of those is when momentum is happening, when volatility is happening and that price is moving, the energy behind it tends to keep it moving in that direction for a short period of time. And we capitalize on those short spurts of movement, of momentum, of volatility. And they seem to last, well, they can go on for a long time, but our ideal trade lasts about 15 to 30 seconds before gravity takes over, market gravity takes over and pushes it the other way. Now, there's all kinds of trader psychology that goes into why that happens. And the great thing about what we do is we don't have to care about any of that, right? We can graphically see when momentum is happening, when a move is going into exhaustion and is about to turn in the other direction. So we get hints in our charts that tells us when likely things are going to happen, and we capitalize on those. But I like that idea about the physics, because that's very true.
You can kind of start to see it apply some more places, and like potential and kinetic energy kind of have a real effect.
Yeah, absolutely. And the cool thing is we see this, it happens over and over and over again to the point where it becomes fairly predictable. We can see when our E lines, our E1, when it's moving to the bottom of the case, it's very likely that that's going to turn around and move in the other direction as that stock becomes oversold or overbought. And we tend to go in a phase where that reverses, and we see this sine wave set up every day.
Yeah. It always goes up, and then it always goes down, then it always goes up, and it always goes down.
Yeah, because it's the cyclical nature of trading, and which our charts capture graphically very well, and lets us know. And within a couple of seconds, you can determine very easily whether a trade is favorable to enter or where we are in that momentum phase, and when we're to get out. Joe says this at least 5 times a day on our call. Our one rule is, when it turns red, get out.
Yes.
And even I can follow that simple rule.
Yeah, and Tim, somebody might say, well, how many trades do you do in that 1 hour? Well, on Tuesday the 11th, you did 8 trades for 25.0895% return. So 8 or 9, 10, sometimes 12, 13 trades are not unusual. You get a lot of trades.
Yes, after you get knowledgeable with it, you can really.
Yeah.
There's a lot of opportunities for sure.
And one thing, Tim, you need to point out, is extremely important, is your leverage.
Oh my goodness. Yeah.
So first of all, I'm going to open up questions. If anybody has any specific questions about day trading, and remember, we do have Randy here, so even if you're a bit of a long-term trader, feel free to drop any questions about specifically Apple, SPY, or Q today. And if you have anything, we can take your questions. But if you have anything about specifically trading those, and then Tim, why do you trade Apple currently? Because you were a bit of a Microsoft trader, and then you kind of switched back and forth. What are you thinking on Apple right now?
Well, the reason I'm trading Apple is that it is a thickly traded stock. It moves. It generally has pretty good volatility from day to day. We love volatility when we trade. And the stock moves. It moves pretty predictably in a $4 to $5 range each day, sometimes less. But it tends to be fairly predictable in its momentum phases. But I started out trading Q, did Microsoft for a while. Microsoft really became too expensive. And then Apple really kind of fell into that real sweet spot for us, being at about, $1 at a 50 delta right at the money, which is just ideal for our trading. And it's been there for a long time, and Apple has been fairly inexpensive. So we're able to leverage that lower cost of Apple into higher profits and ideally into more trades. But if you get 3 to 4 trades a day, that's ideal. That's absolutely ideal. It's all you need to make whatever you need to make.
Mm-hmm. And absorb your losses too.
Absorb your losses.
That's when you think of like smaller And I don't care if your trade lasts 15 seconds or 15 minutes or 15 days, right? The percentage change is due to your leverage, which was Randy, right? You could be in a trade for a month, and the most you could lose or gain is 1%. It's about how people. I don't think people realize how exactly how much control they have over the speed of movement of an investment.
Right.
Like you can fine tune stuff. You can name your price option. Absolutely. It's I want it to go slow. I want to spend a lot of money. I want to spend a little money. You can control that risk reward speed. You really can. And that's not even, you don't have to sign up for a technique to do that. It's just how you structure your option or how you structure your stock. But I want you to know you do have that ability. So if you have that ability, then you can start to really define your technique around that. Like really define it. It's not, well, sometimes I trade this and this, and well, I'll try this today. Right. That's okay to experiment, see what you like, but there's a lot of things that you can get to know and get so much better at that time frame.
Yes, which is why we recommend to our folks on MMT to stay with a ETF or a stock. Go ahead and pick one and get to know it, because they do tend to run. They have their own personalities, as we've talked about quite a bit, and the more you get to know that personality, it becomes easier to predict momentum changes and how far a particular move will go, how far you get out. But you're right about the control. I mean, we have 100-to-1 leverage on this. Where else can you get that? Where you can literally get into this thing for $500 and be profitable and make money. So we are highly leveraged to our advantage. We have complete control. We control when we get in and we get out, and we teach. A lot of our teaching is how to minimize losses, right? If you can get your losses down, and every except for Randy, everyone has losses, right? There are reversals that happen. But we teach how to minimize that. We get it down to 1 or 2 cents, and the profits take care of themselves.
Yeah, Tim, the other thing on your leverage is you're not using margin. You're not borrowing a penny. That's huge. And neither does Randy.
Yeah, and that's critical. We don't trade on margin.
Right.
Do not trade on margin. Margin, what was that? The Arcos or Archegos or whatever that fund was a few weeks ago that the guy from Tiger was running it. He was like 300 or 400 to 1 leveraged on margin.
Yeah, that was the bomb that blew up Robinhood as well.
Yeah, and that created billions of dollars of losses to the banks that loaned him money that didn't know he was getting all these loans. Right. Margin is a killer. Do not trade on margin. By using Tim's technique, as he said, you're leveraged 100 to 1. We're not buying Apple at $125 a share. You're investing $1 a share to generate 2 or 3 or 4% on that multiple times in the same day. And then you're back to cash, and you use the same dollar tomorrow to generate that income. And you're not borrowing any money.
Tim got in this morning on Apple trades. The highest was $1.16. But $116 or something for a contract, $1.12 and 90 cents. You believe that 90 cents?
Yeah, that's where the leverage comes in. But too many people out there in the market, they use the term leverage. They're talking about margin. This is not trading on margin. It's just trading with your cash, and the most like Micah said, the most you could lose is the amount of cash that you put in. You're not there's no more risk than what that is. And by following Tim's techniques and processes on exiting a position that's going in the wrong direction, you're not going to lose all the money that you put in. So it's critical to follow the rules and follow the process, but don't trade on margin. Don't mortgage your house. Don't think that the market only goes up. The last 3 days will tell you it doesn't just go up. It goes up and down. And so by especially using the micro moment trading, you're in and out in an hour, you're done. You got all your cash back. It doesn't matter what happens the rest of the day. It doesn't matter what happens at night. It doesn't matter what happens the next morning. It's only while you're watching the chart, you're getting in and out, and then you're done. And one of the quotes from physics, if I can remember from way back in my high school physics book, and that's like 50 years ago, so it's a long time, but it's an object in motion tends to stay in motion until acted upon by an external force. So that's what Tim was talking about with that momentum. The external forces could be Chairman Powell comes out and says we're going to stop buying bonds. Secretary Yellen could say, well, inflation is coming. We're going to have to raise interest rates. Tel Aviv could be bombed. Israel could say we're going to war. There's all kinds of external forces that act upon the market these days. Rarely is the force something that the company said. It's an external force outside of the company. And by being in only for 30 seconds or a minute, those things don't impact you.
It's like the guy with Tesla comes out and says he's not going to take Bitcoins. You can't buy my car anymore with Bitcoins.
Yeah, so Bitcoin's dropped like 10%.
Which he only announced he could 2 weeks ago, right?
Exactly, yeah.
Well, probably he made all of his profit off Bitcoin. He's probably out. So he says he's not taking it. It's going down. Now he's going to buy it again, and then it's going to go back up again.
No, that did occur. That did occur to me that this was all a setup or a planned setup. Yeah.
You have to approach the market knowing that it's not even. It's like most of the time it's not that. I don't know how that should be legal. Sorry, Joe.
He had a total financial logic for that. He said it today. The problem with the Bitcoin is it takes too much energy to make, too much electricity. Now there you go, right there.
Yeah. Which is the whole thing it was meant to solve. Yeah.
Right.
That means,
We're I think we're going to talk about crypto coming up here, and I'm curious to hear all these.
One other characteristic about Apple compared to Microsoft that I like as far as doing the micro moment trading. Apple has $1 between strikes on the options.
yes.
Microsoft is $2.50. So when you're trying to get an at the money strike, it's much easier to be at the money with Apple than it is with Microsoft. In addition to what Tim said, that Microsoft is more expensive than Apple, but having that $1 between the strikes on the option chain is a big benefit for trading the trade the moment or the micro moment trading.
Yes. That's a great point.
And on the margin, it's not out yet, but I sent tomorrow's editorial to Sue Ann. So tomorrow we have a cow report coming out. Go to micromomenttrading.com and sign up for it. It's free. Been posted for 22 years. But we have an editorial each week that is our topic for the following week on the podcast here. So Tim's editorial was on there last week. And this week's I talk about cash versus margin accounts, how they affect your trading. And then another great thing about margin is not only is it not your money and you have to behave under certain rules even with your money. So under 25K is PDT, which we'll talk about next week, but you can't even trade more than 3 times a week, depending on the type of trading you're doing. So go give that cow report a look for if anyone's new to margin versus cash accounts, and then of course add your own research to it. Make sure you know what you're doing for how to set up your account.
While we're talking about the website, I want to put a plug in for I'm teaching a dividend workshop this weekend, which teaches you how to use stocks that you bought to earn the dividend on. So you've already bought the stock. You've been happy getting once a quarter, getting some cash in on it. I'm going to teach you how to generate weekly income on top of that without ever selling the stock. And so come to, and I think you can go to micromomenttrading.com and sign up. But that's a dividend workshop this weekend, Saturday, starts at 9:00 Central Time. And so it's a good way to learn how to generate extra income from stock you already have.
Yep.
Yeah, and these are I mean,
Sorry,
the techniques that we teach, and we're all about education, are the safest types of things that you can do. I mean, you look at some of the things, you look at what Randy does and what we do on Micro Moment, and these techniques are incredibly safe. I just wanted to point that out, that, we just teach things that are very, very safe.
And they're all a set of rules.
Mm-hmm.
They're rule based. We teach you the rules. You follow the rules step by step by step, whether it's what Tim does every morning or whether it's what I'm going to teach on Saturday. It's a whole set of rules. If this happens, you do this. If that happens, you do that. And you follow the rules. And with the dividend workshop I'm teaching this weekend, there's a set of rules. If it goes up, you do this. If it goes down, you do that. And so it doesn't matter which direction that it goes. And I'll teach you the process that you'll never have to sell the stock, but you can generate weekly
legacy
income.
stock owners. I will say, legacy stock owners, take a look at dividends. I mean, I'm sure you already have, but it's not just dividends. You can. It's the concept of treating your stock that you've owned forever like real estate. It is an asset that you have, and you can let it sit there empty, or you can rent it out. You can do different things to actually make it a cash flow line, but not just an equity that changes with the market.
Usually a dividend pays in 2 to 3% on average, and that's a good one. And using Randy's technique, you're probably getting 25 or 30%, but in addition to your 2% on a quarterly basis.
Yeah. In a lot of the cases, you're going to generate every month more than the dividend you're getting every quarter. So you're basically going to up to quadruple the income that you're generating from your dividend.
Right. These are things you already own.
Yeah. You've already taken the risk, that you have all the risk in the position as you own the stock.
Mm-hmm.
Yeah.
I can teach you how to generate income, like Micah said. It's like real estate, like renting out the house that you already bought. You can either just leave it sit there and go on vacation once a quarter to use it for a week, or you can rent it out. You've already taken the risk of buying the house. So if you already own the stock, all the risk is already in. It's going to go up and down whatever the market does. But you can also learn how to generate income on that stock on a weekly or monthly basis. Most of the stocks have weekly options, and so you can actually generate income on a weekly basis on top of still getting the dividend that you've been receiving every quarter.
Yep, absolutely. And it's usually the flash sales end a day before the podcast, but this time I was running a flash sale on social media this week for dividend for 40% off. So I thought I would throw that code on here as well. Again, last day, so it's probably going to end around 9 p.m. tonight. I think the code goes inactive, but that's for 40% off of the dividend workshop.
Big benefit for those that are attending the podcast today.
Yeah, fair, absolutely. But yeah, last day tomorrow it will be inactive. So, yes, wow. What a great podcast we've had here today. really good stuff. Thank you, Randy, for pitching in on that, and Tim for explaining all of those aspects of Apple. Joe, on Apple specifically, I was wondering if you have any opinions on where it's at now versus how long you've seen it trade, or different things Apple's done throughout the year, because Apple has been not only a strong company, but a major point of Micro Moment since we started. Is there any reason for choosing specifically keeping Apple to start with?
Yeah, there is, Micah. Number one, we're not concerned about where it is price-wise. It's going to vary, but the fact is Apple always varies a lot, and that's what we're looking for. We're looking for a stock that is really moving up or down for whatever reason. We don't care the reason, except we want the stock to just stay in business, and that's why Apple's going to stay in business. QQQ is going to stay in business. If we went out and picked some company that had great movement, but it could maybe go out of business easily. So we don't want that. So we're not concerned about the price of the stock. We just are concerned that we want to see it move. And when we get on the computer in the morning and we look at pre-market and it's extremely green or it's extremely red, we know we've got a better chance of a lot of movement. We don't care which way it's going to move because we can change on the dime. And but those extremes indicate there's going to be some activity to get them down to some kind of norm. You know what I'm saying? And, so we're that's why Tim does Apple. He's such a good. I'm sure there's other stocks out there that would be just as risk wise, just as good. Yeah. But that was convenient. It was easy,
Yeah. But with Apple is predictable in terms of it's thickly traded, and we know because it's such a large company, it's going to continue to be thickly traded, which produces multiple opportunities a day for us to make profitable trades.
Yeah, that was the last thing I was going to add is liquidity. Mm-hmm. It's, we've even seen a lot in these recent months with different things. Oh, sorry. You repeat that deal again, please. Yes. So last day, flash sale, we have 40% off on the dividend workshop. When you check out, just type in DIV40, and that will apply. You'll see it apply before you have to check out. You'll see it take that percentage off. So thanks for asking, Melissa.
And I think one more thing about Apple is particularly if you're doing the Randy's dividend thing and you got your stock certificates, if the stock just was to go completely to nothing, you can eat it. Eat the stock certificates.
Yep.
Well, the stock to work with.
Yeah, exactly. But no, liquidity is of course when trading on such a small time frame, you also need those trades to you have to enter and exit very quickly. There's something that we've said the word over and over and over again, which is filling. Filling is you can put an order out there, but is there somebody on the other side who complete that order, whichever way you're going? Mm-hmm. Are they at the right price? If you are sent below them, they're sent above you, something's off. You're not going to fill until those prices meet. I think that's a lot of beginners get so confused about just how a trade happens because it's always talked about buyers and sellers, right? Mm-hmm. If a transaction happens, there is a buyer and there is a seller. That's not how it works. It's not like it's only bought to, create a demand. There is a buyer and seller for each transaction. So the movement then comes from something else. It's not because, this time it was a buyer. There's always a buyer and seller. So, we talk about that on the Micro Moment and everything like that, all of our other programs. But that is one other key thing that across every type of trading you're going to do, be mindful of liquidity, please, for your sake. There's even some trades, some of this parabolic stuff that people are getting into. And they've been on Robinhood, and I've heard stories about things like this, and they're up, 100%, and they put in a sell order, and nothing happens. Falls backwards, and they put in a new sell order, and nothing happens, right? A P&L is theoretical. That's it. P&Ls are theoretical. Until that is closed, filled out, and you can do that when the time comes. Doesn't matter. So that's another reason it's nice that Apple's so thickly traded.
Yep. Absolutely.
I think margin is so great the way that Randy and Tim use it. It makes any investment a penny stock.
Yeah, that's very true. Very true. Excellent. Well, I want to thank everyone for being here today. Again, micromomenttrading.com. We have the editorial coming out tomorrow for next week's topic. And that comes out for free every Friday. There's some different trading advice. Emails from our clients are on there, the different activity they're doing, some of the stuff that Randy does. So go give that a look. If you want to see over 50 free trade examples, go look at TikTok, Micro Moment Trading.
You can hear them talking too.
Yeah, it's just a live clip from those morning shows. Find us on Facebook, LinkedIn, YouTube, Instagram, all that good stuff. I want to thank everyone for being here as well today. So, anything else, guys, from you?
Well, I think the TikTok's interesting now that we found out this week about their involvement with China. So these guys are starting to do them in yen? What is that they use over there? In China?
Yuan?
What?
It isn't it one or something?
Whatever
what
it is. That's what you guys need to start quoting. Yeah.
Because yen is Japanese, so
Yeah.
I think the Chinese are one
One
or something like that. I think they have two different currencies in China.
Yeah.
Oh, just to complicate things even more.
Oh yeah. You know, the government controls everything there. So
Right.
we're not there yet.
Thank you for continuing to keep us in the know and on the go. You're so eloquent, in the know and on the go towards our finances. I appreciate that, Melissa.
We'll have to use that in the know and on the go.
Yeah.
Yep. Absolutely.
Okay.
All righty, guys.
Thank you very much.
Hope to see you all Saturday at the dividend workshop.
Oh yeah, hey, and Randy they won their game the other day, and they're doing great. The team.
Nice.
We're undefeated for the season so far.
Nice.
Wow. Oh yeah, and Randy, you're saying before we came on that if you win today, what happens?
No, today is just practice. I'm going to be heading out as soon as we log off here. I'm heading out to practice. So,
yeah. Randy, I'm sure those wins are due to the superior pitching.
Well, I am the starting pitcher. So
yes.
There you go.
So far, knock on wood.
Pretty good.
We'll see. We'll see y'all later. Bye bye.
Pitching is a fickle position. So.
Yeah, absolutely.
Take care.
Bye, guys.
Bye.